This is a Cisco day chart, really close up, recent history. I wanted to actually just take a side note to talk about news and the fact that there's a guy named George Gammon who's pretty funny. He's got a thing called Rebel Capital. Yes, Rebel Capital. And I don't agree with his politics, but he's really good at analysis. And the thing that he points out is the fact that a lot of times throughout this, last year or two, like you look at this economic data here. Damn it, I lost my thing here. There we go. Economic data like this, which I will tell you how to get a hold of this economic data. This is a URL. You can look at anything you fucking want to look at, and watch it fill in real time as these reports come in at 7 a.m., 6 a.m., that kind of shit in the morning. But the point is, jobs reports would come in, PMI reports would come in, initial jobless claims would come in, and the market would still treat it like it was good news. And his joke is, people are starting to treat good news like good news, but bad news like bad news, rather than treating bad news like good news. This is the NASDAQ. The S&P 500 coming off of its all-time high from July into August 5th. It was down 10.5% based on that bad jobs report. You see what I'm saying? In fact, that little candle licks all the way down to here. It's not just here. It literally licks this far down, and then people go, oh, oversold, and then they buy back in, okay? And then the jobs report 9/6 was not great, but not as bad, okay? Cisco, on the other hand, only came down off of its recent little peaklet, I guess you could call it, starting on the beginning of August, so only 5 days previous. And I guess they had earnings coming up too, so that was going to help them, right? Which was right here, of course, as you can see. It fucking was great, and it went right back up again. But it only went down about 8%. In fact, that's exaggerated. It's more like here. It's really, about 8.12%, okay? So not as bad as 10.5. And see how long it took for the actual S&P to get back off the bottom there on that black line and go green and go back up? Well, Cisco had a nice little boost by the freaking earnings report, came back up again. And then the next September 6th jobs report, which was not as bad, but still not good, wasn't quite that bad. And it still managed to, if I were to draw a line here, performed like the fucking S&P, the recent little high, and then it goes up through it. Just like the S&P had a recent little high, and it went up through it right here. So that's good that Cisco is not behaving as badly as even the S&P, which if you were to compare this all to NVIDIA, would be fucking disastrous. Let's see how far it dropped from its recent peak. 3 fucking percent. Okay, for the August 5th report, coming off of its most recent high, which was sometime in July, okay? So you're not dealing with the fucking crazy nosebleed volatility of NVIDIA. And as I'm pointing out here in my video, NVIDIA is basically just making lower highs and lower lows. Well, when you really zoom out, as I probably have talked about, or I'm gonna talk about here, you guys keep making higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, that kind of thing. You keep going up, which is good. I want to compare you to Amazon. Okay, I have a friend that's investing in Amazon recently, and I just want you to think about what's going on here. This is a day chart, so each one of these things is a day's worth of trading, and if it's red, that means a bad day, and if it's green, it means a good day. There's a lot of bad days, okay? He didn't buy back here, but this is October 2023, okay? So going up, doing really well, then flattening out a bit, not doing so well. Then literally all we did was let's take a look at our date here, the 5th of August. You need to pay attention to that. 5th of August, man, was a day, man. That was the first day we got a bad unemployment report back in August, which I talked about, and you guys get sick of hearing me say it. But look at how far it dropped. Well, let's see, just how far did it drop? From the peak here down to the bottom here, 18%, okay? And that's more than the average, it's like the total. But still, it literally knocked it into a new channel. As you can see, it can't get back into its old channel, its old neighborhood. It's now in a new channel, which is tighter, smaller, and lower. It's still headed up, but what can happen is if we get a candle written down here one day because of a really bad unemployment report, it could just fall off. And we talked about the whole selling of margin calls and stuff like that. Just automatic robot selling margin calls, okay? Why is this bad? Because in general, look at this red line here. This is the 50-day moving average. It was well above it, and both are trending well. And then it comes down and slices through it, which is not good. This is the 300-day moving average, okay? Which back in 2023, it actually sliced through it and got above it, which is good news. But the 300-day moving average, as you can see, is basically flat. It is not trending up like the 50-day is, okay, the red thing. That isn't very healthy because it's starting to arc over. It's starting to literally become flat, okay? So if it gets down below its 300-day moving average, it could take a long time for it to get out. How does Cisco look in comparison? Basically, first things first, earnings green, earnings green, earnings green, earnings green, earnings green, earnings green, and dividends. I forgot about dividends. You guys have fucking dividends. Earnings green, earnings green. All your fucking earnings are green. All of your fucking, I've never seen this before, okay? This is good. I'm excited. Dividends. You get a fucking 3% forward yield dividend. That's good. And here's the other thing. Your dividends just go up and up and up and up and up. And your share price is not necessarily going up and up and up. That means that they're literally just giving back more money to the shareholders. If you look at this old chart here, I don't know why they sort of break this. It goes up, literally all green by a certain percentage. It used to go up even bigger, percentage wise, but still, Cisco keeps increasing their dividends. Okay, it's once you've got to the place where you got hundreds of shares or thousands of shares, dividends make a difference. Okay, it's 3% of whatever it is you paid for that share on that day per year per share, but it's money. Okay, let's look at this again. And I think did I show you this one? This is basically Cisco's annual change, percent change. Okay, so 5.4, 9.3, 22, but 45% up, 3.5% down, mostly green. And the red numbers are not that huge, okay? So you're in good company, okay? This is not a bad stock that I would just buy and just throw the fuck over the fence, okay? You can look this up on macro trends pretty easily. Okay, so let's take a look here. Well, this was just for me to show you the earnings, okay? I have a few charts to show you. Here we go. This is a big overall picture, okay? I'm not gonna go back any further than the 2008 GFC, even though you've got all these huge fucking numbers back here for the dot-com bust, because they're not that useful and it doesn't really apply to you. But I just want you to understand the value of owning stock in general. At the great GFC, Cisco was down 56%, and it didn't regain that price point for fucking 10 years. That's a pretty hard smackdown. But if you had the presence of mind, let's say that you were just dumbly getting RSU grants, and some of your grants actually came down here, or even better, not necessarily better, but you actually are getting ESPP, and your ESPP grant is every 6 months, every 6 months, every 6 months, every 6 months, every 6 months. You see what I'm saying? Sometimes you're getting it for this price minus 15%, like even lower, okay? Now, if you were a buyer back then, just to go from here to this little peak here in 2010, 88%, 88 fucking percent. What if you bought those shares down there and kept them until 2017? 127%. I'm showing this because I want you to understand the value of holding shares, especially when you were lucky enough for them to get bought when they were cheap. The thing that I want to show you is Cisco in general from 2008 after the GFC is just generally for all intents and purposes, I'm just going to draw a little line through here. It's going up, okay? For all intents and for all purposes, it's just going up. Slowly and inexorably, but like a fucking, iceberg or a glacier, but it's doing it. When you got back to where you were, if you'd been able to buy at the bottom here, it'd be 151%. If you got to this peak, this nice, beautiful peak that you had here in April of 2022, I don't know what the hell happened then, but you should look it up. You should find out what happened in 2022. 359% for people who were fortunate enough to buy at this support line, by the way. In current dollars, if you had bought back then and let it attrition back down again, it would still be worth 284% over what people bought during the great financial crisis back in the day. Now, that's not that is actually really, really good. It's not necessarily Apple money, but here's the best part. Like I drew that line. It just keeps going up and you have fucking more green annual years than red ones, okay? And you guys got a dividend, okay? Let's look at current recent history, okay? And talk about numbers here. The dot-com bust was an 85% drop, but Cisco was dangerously inflated and it was part of the bust. It was actually part of the problem, okay? We don't need to worry about that. That's not gonna happen again. The kind of dot-com bust shit just isn't gonna happen again. Between 2002 and 2008, it did slowly go up in general, but it was just trading in this channel. I want you to start being aware of these channels. These channels exist. Literally, traders know these channels exist. They know that when they get to the bottom of the yellow line, they need to buy. They know when they get to the top of the fucking line, they need to sell. They know when they get close, and it's also news. Here's the 2008 great financial crisis, and it came down. But interestingly enough, it didn't go any further than its channel. Cisco did extremely well compared to some other companies, okay? And then it kind of decided to sort of like lose this channel and it sort of did some other shit. There was actually a sort of a mini recession that happened in between 2009 and 2010 and 2011, okay? No one's fault except, so you don't need to worry about that. Look at this nice little channel. Boom, 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 boom. Look at how fucking orderly and beautiful it is from like 2011 all the way to 2017. October of 2017, I have a note, breakout. That is a fucking hell of a breakout. What happened here? What happened right there on that big green day right there? What the fuck is that date? That date is November the 17th or so. I don't know if I don't have earnings like reports down at the bottom, so you're gonna need to look that up yourself. This is your own homework assignment. But what kind of a delta are we looking at from buying at the bottom here just to get into this area? 44%, not bad, dude. Not bad at all. Then it starts up on a tear and it kind of does this thing, blur, and it's really going. And then I make a note here because I've been doing research into this for other shit. Very interesting. August of 2019, of all things, it takes 3 months for it to just precipitously drop 22 fucking percent. This was actually the first rate cut by the Fed. The Fed had actually had interest rates for this all this time. 0, 0, 0. In 2018, they fucking went up like this. I'll draw what it looks like. Basically somewhere around here. And then they went like, let's draw another line. I have to pick the fucking tool every time, really? Okay. Look this. And literally, so sorry. This would have been the first rate cut right there. And trust me, they fucking like went down fast, like really fast. And I'll just draw the rest of it. They went like really, really fast to get back down again. So my note is, it was the first rate cut by the Fed. It was headed back to, the interest rates were headed back to zero, partly because Trump tweeted at Jerome Powell and got mad at him. And also it's the moment that bonds shoot up more, which means a flight to safety, okay? People only buy bonds. They only buy the TLT, things like that, because they want safety. No one talks about it. This was a little mini recession that no one talks about. Everyone says that if COVID had not happened, that we would have just gone straight into a recession anyway. So you need to find out what happened to sales or whatever the fuck. So it drops down to 22%, okay? Right from there. Then COVID happens and it drops down another 35, okay? But the way percentages work, I think I measured this whole thing. It was only like a 44% drop total. 44. So you have to remember that once the price drops down, especially when you have small numbers like 50, 40, and 30, and 60 and shit like that, that this is a 22% drop. That's a 35% drop, but collectively it's only 44%. It's not that bad, but it's not that good. It's basically fucking gets cut in half. Down 35%. Think about what this means. It takes you all the way back, like a video game, all the way back to 2017, okay? But everybody knows that it's oversold. Everybody knows that this is support. Everybody knows Cisco should not be here. It never touches that line again. It never touches that line again, ever. And it just keeps going up. This is a fucking outlier, this shit right here. What happened at the beginning of 2022 is what I want to know. Because that's really something. All this shit here, what happened here? In fact, the catalyst was probably right around here, March 2021, okay? So that's your homework. You need to figure out what made it so that everybody just fucking had to get down here, or was this just part of the whole thing? Now, there was this cooling off with the NASDAQ and everything else in the S&P 500 from 2022 through here. A little mini recession, again, that nobody likes to fucking talk about. Even the fucking GDP was not doing well. It was like in the 2 range, okay? But Cisco has a beautiful support line that just keeps fucking going up. Again, because of this shit, okay? Because of this shit. And these are years, okay? Not even just quarters, but years, okay? Higher highs and higher lows. Higher highs, higher lows. You want higher highs and higher lows. You don't want what Amazon has, which is fucking lower lows and lower highs. That's what this looks like. Now, it's trying to make higher highs and higher lows, but let me show you NVIDIA. Reaches its peak way back in fucking June of 2024. June. We're in September. Lower high, lower low. Lower high, lower low, lower high. You don't want to be NVIDIA. You want to be Cisco. Okay? Get my chart back here. Now, where are we headed? Sorry, I personally believe that you were to get stock that was bought around this time, that if you do get lucky enough to get another one of these little peaks right here, it's easy to see. At the very least, you're going to get somewhere in around 61 bucks or 17% up from here before any sort of correction happens, okay? Now, I'm sorry, that's right about here, okay? But it's this channel. Once you draw this channel yourself on a chart, you can just look straight across and see what's the fucking price. Oh, it's 60 bucks or whatever, you know? Now, if you do get a correction, I personally think it won't go any lower than this support line because people just aren't going to let it do it. The computers won't let it do it. The algorithms probably won't let them do it. And this is a good solid 44% drop, okay? Which, that's no worse than what you saw during, what did we say during the Great Financial Crisis? How far did it drop? 56%. Okay, it could go lower. But you want to be fucking in the ESPP fucking gravy train buying that shit down here. Because what kind of rewards do you get? 95%. What do you fucking get? You get 151. You get these big fucking rewards for having bought that shit down low. I used to love it when Apple crashed back in the day. I used to just love it. So in general, you do not own a stinker. Okay, your stock doesn't suck. It's not the best, but it's certainly not the worst. And the best part is this beautiful up and down oscillating shit that is generally making higher highs, higher lows, higher highs, higher lows. And all the time, your fucking ESPP is grabbing it down here somewhere or down here and then grabbing it up here, but it's also grabbing it down here. You see what I'm saying? And some of your RSU grants will land close to these fucking low numbers, okay? This shit is worth something is all I'm trying to say. And you want to be in, not having sold out. You want to just go ahead and be in when this crap is down here. And hopefully your ESPP and RSU grants happen again and buying it down in the fucking $32, $33, maybe even $28 range. Okay, that's my thing on Cisco.